Good afternoon, everybody. I hope you can hear me and that this has started where you're all joining us. If there are a few people still joining us, don't worry, that you'll be able to see the recording later in a few days. So we're here today to discuss how CAF, Charities Aid Foundation, can support your organisation to stabilise and grow through borrowing, either through our social investment team, Caf Venturesome, or our Bank for Good, Caf Bank. We also have time for some questions later on in the webinar. So there's a box to the right, hopefully you can all see that, where you can just pop a question in at any time that you think about it. And my team behind will make sure that I get to that so I can put it to the speakers in a few minutes. So let me introduce our speakers. Next slide, thank you. So the home team with CAF team is myself, Jo Weatherspoon, Holger Westphally, Richard Hunt, and we are delighted to have our guest speakers with us this afternoon, Kemi Folarin, CEO of Young People Matter, and Jonathan Bryant, CEO of York Conservation Trust. So here's a little bit of background on Charities Aid Foundation. We're better known as CAF. We're a charity, a bank, and a champion for better giving. And we help donors, companies and charities to make a bigger impact. Caf Venturesome and Caf Bank are just two parts of the whole of CAF, and we can always signpost you and your organisation to our other teams for non-financial support. But the key thing to know about Caf Venturesome and Caf Bank is that we don't lend money to make a profit for shareholders. We are a charity, and the only reason we lend money is for the social impact that it can support. Which leads me to our next slide, why you would consider borrowing, especially at this time. Borrowing can help you stabilise from the effects of the pandemic with flexible loans and standby facilities for working capital until a contract or a grant payment is received. It can also help you to grow as you launch a new income generating project or are looking to buy a new building. Instead of waiting until you've reached your fundraising target before you can help your beneficiaries, borrowing will help you to start supporting them more quickly to generate the income you need to grow and eventually repay the loan. Our next slide will then help you decide who you should speak to. And we know this is a really text-heavy slide, so I am sorry, but it's just for notes really. But the key thing to take away is that Caf Venturesome, our social investment team, mostly lends unsecured loans up to 400,000, whilst Caf Bank can lend between 150,000 and 9 million for social housing projects, usually 5 million for other projects, and all their loans are secured. That's the key differences there, but don't worry if you're not sure who you should speak to. I know it's confusing and we will always help you to get to the right team. Our next slide explains that when you take a loan out with CAF, we really get to know you and your organisation. And as I said before, we're always here to help you, to support you to get the right non-financial help that you need that is on offer throughout the whole of CAF. And this lovely quote at the bottom is from Caroline, whom we know at Venturesome really well. We've supported their organisation with 3 unsecured loans over the last 8 years. But we've also been there in times of uncertainty with advice, and during the pandemic we were able to offer a capital repayment holiday for them, and I'm delighted to say that they now are back and operating as normal. So now I'd like to hand over to Holger Westphally. Holger is the lead with Caf Venturesome, our head of Caf Venturesome, and he's also been a senior member of our team for the last 5 years. Thank you, Holger.
Thank you, Jo. Hi everyone, I hope you can hear me. I'm Holger and I've been with CAF for 5 years. My background is in wealth management and followed by 10 years of consulting to the charity sector. So the first slide is really our track record at Caf Venturesome. We've got a lot of experience investing in social enterprises. We've made a lot of mistakes during this time, but I guess the point is that we are able to bring this to bear and usually help charities to find the right solution and we're happy to talk to anyone and try and work through whether they are, whether we're able to lend or not, to help them find the right solution for their organization. Next slide, please. Yeah, what is social investment? So what the picture shows is really the social investment from the funder side. All our funding is philanthropic, and most of our funders will lend us money over a certain period of time, because in this way they are they are able to support many charities with the same amount of money, and either commit their money in perpetuity to keep lending it, or to take it back and maybe donate it at the end of 6 years or so. From the borrower's point of view, social investment is very much a loan to be repaid with interest, albeit with a great deal of additional support, and the purpose of the loan is very much to generate social impact. So it's important for us to see that the organizations we lend to are doing social good, and we'll have a good look at that, but we're also able to be flexible and take a great deal of risk when we see that the cause is there, and our funders support us in doing that. Next slide, please. Yeah, what we offer. So over the last 18 years, we've made a lot of investment, and through a lot of different structures, we have found that for most charities, unsecured loans over up to 10 years are the simplest and easiest way to help. And so this is what we recommend in most cases, although we will have a conversation first and see what is most suitable under the circumstances. We also have our Specialist CLH fund, which stands for Community-Led Housing, which offers pre-development finance, as well as junior development finance, and land purchase, small grants, so all sorts of financial support to small community organizations looking to establish affordable housing in their community. We are also beginning to be able to offer blended finance, which is basically a mixture of loan funding and grant funding in certain circumstances, and we're looking to expand this over the coming months, as we're aware that the need is great, and it is increasingly hard for charities to generate the cash flow to repay loans. So that's an area that we're already dipping our toe in, but looking to develop over the next few months. Next slide, please. Yeah, why take on social investment now? So CAF, the Charities Aid Foundation, has a mission to support the charity sector and to improve the resilience of the charity sector. So we're looking to help organizations through the difficulties of the pandemic, and help to readjust their business models, help to finance new projects that have become necessary, or just help them survive through a rough patch in order to emerge healthy and able to continue delivering their social impact. We know the main thing that is needed right now is grant funding, and we're aware there's never enough grant funding to go around, and we are looking to develop some ways of grant funding as well. But I guess our our main focus is lending, and therefore we are talking about our loan product here, but we will certainly not lend if we think it is not the right product for you, if we think there are better solutions out there, maybe cheaper finance or grant funding out there. So if you're not sure, you can always come and talk to us, and we will do our very best to find the right source of finance or support for your organisation, as our main purpose is to strengthen the charity sector. Yeah, so that was my piece of the presentation. Please enter any questions that you've got into the question box, and we'll answer them either at the end of this presentation, or if we run out of time on our website. I think we'll be able to carry on answering some questions.
Thank you very much, Holger. Thank you for that. And now I'm pleased to introduce you to Richard Hunt. Richard is our head of customer lending and lending at Caf Bank, and Richard's been with Caf for the last 8 years. So over to you, Richard. Thank you.
Thank you, Jo, and hopefully I'll pass the first test and unmuted myself and remember to sit down rather than wander around as I talk to you. I'm going to spend a few minutes introducing you to Caf Bank and our lending programme, which complements the Caf Venturesome programme, before we get to Kemi and Jonathan, who really are the stars of today's show. Caf Bank, as we move on to the next slide, we'll show you some key features of Caf Bank. The picture is not our office, you'll be very glad to know. Caf Bank has been established for over 30 years. We are a wholly owned subsidiary of the Charities Aid Foundation. We're regulated by the PRA and the FCA. We're a fully authorised bank in the UK. And our main service is providing core banking services for charitable and charity organisations across the UK. Today, we provide banking for over 13,500 charities, and they trust us with over £1 billion of their money. We provide all those things that you'd expect a bank to provide: cards, current accounts, savings accounts, payment mechanisms, the ability to pay by backs, the ability to have dual authorised internet banking, all of those things you'd expect a core bank to provide. And this year, the Charity Financials Survey named us as the best sector bank for knowledge, which is something you can imagine that we are incredibly proud of. For the last 8 years, we've also run a lending programme, and over those 8 years, we've lent over £220 million. Our lending programme contrasts with the venturesome one. You'll notice that it is a secured lending programme based upon the idea of a commercial style mortgage. Now, that may be to buy property, that may be to buy commercial property, that may be to buy property that you can operate a church or a business from. It may be to develop a facility, or it may be to use a property to support your business plan. In one case, we lent some money against an office building to provide a charity working with spinal rehabilitation with some really exciting kit. We lend between 150,000 and 5 million, although that raises to 9 million for those in the social housing sector. And we work across the UK. We have charities in the north of Scotland and in the tip of Cornwall, in the southeast and in Wales, and across the UK. And they come in from a real wide range of settings, for heritage railways, social houses, conservation charities like you're about to hear about. And the team is specialised. And I thought it was worth taking a couple of minutes to think about why you might choose a specialised lender. So for me, that comes down to three things: knowledge and motivation, which leads to understanding. All of us on this webinar understand that the charity sector is different. We have areas that are unique to us. The reporting standards under SORP, the requirements of the Charities Act of Section 124 for mortgages, the Measures Act for those people that come from a faith background in the Church of England. And our team is used to dealing with those. There will be areas always that we're learning about as we work with customers, but we're used to the concepts that people have. We're used to working with teams whose motivation isn't to bolster the balance sheet, but to change the world. And we're used to organisations who are doing what they do on the basis of the funding they're provided. An example for this for me is a deaf charity that we worked with for the last 8 years, and they were really struggling to get a mortgage. They couldn't get to the point where their commercial bank managers could help them. And that's because the commercial bank managers couldn't understand that a charity could make mortgage payments. It was a simple gap in understanding and knowledge. And that's not to critique those individuals. This would have been a very small part of their job. My team was able to help that charity. I'm delighted that 7 years on, they're still in their property. They're still making a massive difference to the world around them. And that was done on the basis of knowledge. Understanding comes from that, and it comes from the motivation being similar to yours. As Joe said at the beginning, there is no external shareholders. The bank's single shareholder is Charities Aid Foundation. That's a registered charity. And that makes a massive difference in how we are able to help individuals and organisations. Today is all about thinking about your growth plans and thinking about how you grow forward and why you might consider lending as part of that. And I've sat on both sides of the fence. I've sat as both a trustee and a banker. And for me, the piece is around proving affordability based upon your results, and then allowing that to bring forward the projects that you want to do, keeping your donors engaged. So at this moment, we are helping build a Gurdwara for a charity. They had worked really hard to raise their initial stake, but they also knew that if they continued to just fundraise for the new Gurdwara, then building costs would continue to escalate, and they'd have a long, slow slog to get to the point they could actually build. And the income that Gurdwara would generate in terms of hiring and in terms of additional support wouldn't be there to help them. So by borrowing from us, they've used the money that they've raised from their donors, and their donors can see that making a real difference today. And they've moved forward with their plans, and part of the repayment from their plans will come from the actual operation of the facility. So working your way through that can really help. I'm hoping that gives you a good understanding of where you might talk to Caf Bank. I suspect as you listen to our next two speakers, you may get some more. But obviously, if you've got questions, please feel free to ask them either now or by reaching out to us afterwards.
Thanks very much, Richard. Thank you. So you've heard from Holger and Richard, and now our guest speakers are going to bring a little bit of colour to what you've heard so far, just to make it a little bit more exciting for everybody. First of all, I'm delighted to introduce you to Kemi Folarin. Kemi is the CEO of Young People Matter, which is an award-winning diverse charity and community action group that's based in London. And they've been running after-school clubs and community projects since 2007. And Young People Matter is an investigative venture, and we're really excited to hear your progress so far. So over to you, Kemi. Thank you.
So hi guys, my name's Kemi, and I'm the CEO of a charity called Young People Matter. So just to give you a little bit about what we do, how being part of the getting a loan from them has really helped us grow as an organisation, and how it can help you guys if you're thinking of maybe approach for a loan or some investment from them, how it can help you, especially during this climate. So we can go to the first slide, please. Okay, so we all have a desire to grow our business, and I really like this quote which says, building a business is knowing how to do something. Being proud is to create something that will make a real difference in other people's lives. And what I found is having a loan from the organisation has really helped us to make an impact, has helped us to develop our vision. So in this time, we're kind of maybe reaching out for different funding streams. And I know starting in 2007, which was 13 years ago, it was much more easier to obtain funding than it is now. And as a charity, it is about looking at different ways to generate income in order to help our business to grow and to make an impact on the lives of others. So can I have the next slide, please? So just to give you a little bit about us. So Young People Matter started back in 2007 after the death of Billy Cox. And as a team, we wanted to be able to provide activities for young people in the local area. So we run a range of activities, from after school clubs to junior clubs to youth clubs to cooking sessions to holiday camps, all with the kind of ethos of helping young people to reach their full potential. As we grew as an organisation, we knew that we couldn't solely rely on funding, and we turned our homework club into an after school club. And now, coming from one after school club, we currently have 7 across Lambeth, and that was the help of obtaining a loan to be able to expand what we do. And as a charity, we found that we had to have an additional source of income to be able to run the services that we run for free within the local community, but we had to have an arm that helped to generate income. So though we use the after school club as a way of generating income, we have an ethos within the organisation which is business minded, social hearted, because our aim is to help people, but we also needed to be able to generate income for stability over the long term. So you'll find that there are some amazing charities or organisations out there doing amazing work, and one of the things that often stop people from progressing or achieving their kind of vision is funding. Can we have the next slide, please? So through getting this funding, we've been able to, if we're getting the loan, we've been able to achieve some of our kind of visions and our outputs and our goals of what we want to do within the community. And our main thing is to be able to help children and young people to have new opportunities and experiences. So we have after school clubs in affluent areas, but also in areas that are described as deprived. So we're able to give both sets of children the same experiences. So what we do at one site, we equally do at another site. So we want to give children new experiences and opportunities to try things that they may not be able to try. So for example, we're taking kids to skiing, which kids still talk about it to today. They're older now, but they always remember that experience of being able to go skiing to the French Alps. And I remember back in 2007 where we took kids to Fort Park. And I remember at the time I was working as a youth worker in Kingston, and we used to always take the kids to Fort Park, that sometimes they wouldn't even get on the coach because they couldn't be bothered. And when I started up the project, we took a group of kids to Fort Park and they asked what was Fort Park. And I was so surprised because as a youth worker, I was probably 18 at the time, we always used to go to Fort Park with the young people. And that's kind of where the desire to give people new opportunities. And it's something as small as Fort Park, which people can access very easily, but there's a lot of kids who would never or have never experienced that. On a weekly basis, we offer services to over 190 children across our different sites. But we didn't just want to make money from our after school clubs. That wasn't the aim. It was to help us to generate income to be able to continue the work that we do within the community for free or at a very low cost. So we make sure that our after school clubs are affordable. We compare them against other after school clubs that are running in the area, and we also offer free spaces. We help to provide a space where we can help children who may not speak English, their parents may not speak English as their first language, and we're able to support with their homework. We're able to support with managing their behaviour. So we have kids over the COVID period where we had lockdown, we were helping them at a school provide care for key worker kids. And there was a boy who has been bullied at school, and the teachers actually turned around after the 12 weeks and said, he has changed. He made new friends. He was dancing. He was doing things that he never had done in school before. And for me, that really spoke to me on the last day about having smaller groups of kids having a real impact on their lives, getting to know them, because as a CEO, I pop in and pop out, but through the shutdown period, I was on site a bit more, interacting with the kids, and to hear that from the teachers, but also to see the growth of some of the kids dancing who never really dance, who don't really speak up, the change that happens. So our main thing is about having that impact, not just for the children, but also the family. Next slide, please. So when I came across the CAF, it was very was looking for some money to expand the project. And at the time we needed income. And it was very difficult trying to go to a bank for a loan. There was, you know, a lot of information that they wanted, or it would have been a long process. And I came across the CF, and I think it's the best thing at the time. It's about 12 months ago that we came across, because we had to put through a business case. But through doing that business case, it made us look at our infrastructures, what things that we was doing good, but also the things that we wasn't doing that we needed to have in place. And what I loved about it is that it wasn't just saying, here's some money, here you go, but it was about looking at our infrastructure, looking at where we could develop as an organization, or things that we were potentially missing, and how we could get that support to grow in that area. So, you know, I had to do a lot of cash flows and account management, and though I do it, I wasn't doing it on a regular basis. And it really got us to look at, you know, actually we need to do this to see where the shortfall is. So we had to put through a case of, you know, our project that we wanted to do. We needed to look at the impact that it would have, but also how it would generate income in order to finance the charity in the long run. So we had to look to, I think it was 3 to 5 years ahead of how opening these after school clubs will make a difference. So it was a really good exercise. At the time it felt like, oh, we had to get this, we had to get that, but actually looking back at it, it was a really good exercise for us to be able to look at the organization, look at this project in depth, because sometimes we can have ideas and we don't really look at it, I guess, in the long term, and how is it going to make money, and if something goes wrong, what would happen. And through having this investment, we was able to open a new after school club. So we're very fortunate to be in a position where a lot of people ask us to open up after school clubs now, where when we first started, we were calling around, and now people, of the reputation we have, people call us. But what we didn't want to do is open too many quickly, and the quality of what we do went downhill. But equally, through speaking with part of the teams at the CAF, we was able to look at, okay, how can we create a model where we can meet the demands of the schools in a quicker period than what we were doing it at, and having additional income gives you that freedom to a degree to do that, because you're able to start something without necessarily having the income coming straight away, but being able to have that investment in the beginning to be able to put it forward. So building the business case, as much as it can sometimes seem a bit strenuous, it helped us personally to look at our infrastructure and look at the things in which we needed to put in place and which we didn't have in place, but also see what we had in place, which was good. Next slide, please. So in terms of repayment, so we have an after school club which generates income, but in order to start it, we have to invest a bit of money on buying all the equipment and paying for venues that we're going to be using, and also having staff in place for their training. But once our after school clubs start up, the income starts to generate. But as you know, in the beginning, sometimes you might not achieve the numbers in which you anticipated to achieve. But how we repay it, we pay our payments monthly based on the income that we get coming in. So even if we didn't do very well in a month, the repayments wasn't very high, that it made us feel like we had to be rushing around to find money if it didn't kick off as we expected. Like, for example, this coming back over after the lockdown, our numbers are nowhere near where they used to be. However, the repayments are manageable, that we're able to repay the payments back monthly to the CAF, which helps to keep us doing what we're doing, but also we're able to pay the money back. The next slide, please. So CAF provided us with the opportunity to grow. And I like this slide because it talks about, you know, growth of an organization. We all want to grow, and we all have a vision for what we want to do for our charity or our organizations. And they don't just provide the financial support, they also provide the knowledge. They also provide you opportunities to network with other organizations. So for example, we want to expand to open nurseries, and I was able to speak with somebody where they linked me with another person who has chains of nurseries to be able to give me that information of how we can expand. So it's not just the financial support and then leaving you to go off and do what you're doing, which you may find when you get grants. You're just given the money, and then at the end you need to just give a report. with the CAF, there's that constant, you know, checking in on how things are going, if you need any additional support. And I think that's really good, because one thing I've always found about funders is that they just give you money and sometimes they don't get to know you. And with this organisation, this charity, they get to know you. I know the person who I speak to, she knows what we do, and she checks in often to see how things are going with YPM through the COVID period. I probably had 3 calls from her and emails just to find out how things are going, and even down to having this opportunity to do this webinar. So they don't just give you money, they give you that extra additional support, that you can feel that if you were struggling or if you had a problem, that you can actually go to them and say, look, what can we do? And they provide you with that support. So if you're thinking about, you know, getting a loan and you're thinking, you know, you want a grant and you don't have to worry about paying it back, this is a good opportunity to help to grow your organization, because funding is becoming more stringent to obtain. And sometimes you have amazing projects or ideas that can help generate income, but this is just a way to get that income to be able to start the project without having to go through 6 months of waiting for a decision, or being able to, or having to fundraise the money that you need to. So for us at YPM, it has been a great opportunity to have this access to funding. And one of the things I really love is that we was able to, we asked for 60,000 and we was able to get it. And I love this opportunity that they have, that you just take as much as you need at that moment of time. So we draw down a certain amount of money, and each time we may need a bit more, we can go back to that 60,000 and get a bit more. So we didn't take all the £60,000 at once. We take what we need as we're doing it. So I think they have they're very flexible, they're very supportive, and they actually really want to give you money to make social impact, not to give you money to make money back for themselves, but to really make an impact. So guys, I hope that's helped you. As a charity, we've been with them for a year, and I think it's been a very good opportunity for us. So thank you very much.
Kemi, thank you so much. We really appreciate your time and all the kind things that you've said about us. So thank you again. I'm really thrilled now to hand over to Jonathan. Jonathan is with York Conservation Trust, and they are a client of Caf Bank. They hold their principal banking accounts with Caf Bank, but they've also been provided with unsecured lending and overdraft facilities. So now I'm sure Jonathan will explain to you how his organisation has benefited from that. Thank you.
Thank you very much, Joe, and hello everybody. I'm relatively new to York Conservation Trust. After a background in museums and heritage sector generally. My predecessor was involved with this organisation for some 30 years, so I'm still sort of a youngster. And it was my predecessor who established a very good relationship with Caf Bank, which I hadn't worked with before. I'm very pleased to do so now and enjoy the sort of close relationship and sharing of information that we have with the team there. Just a little background to York Conservation Trust, which is quite exceptional and different from any other heritage organisations that I've been involved with or know of. We're 75 years old this year. Sadly, we've had to delay our 75th anniversary celebrations for obvious reasons. But we were established as a family property company, Ings property company, with a strong sense of civic responsibility. The 2 founders were the gentleman you see there, John Bowes Morell, who was twice Mayor of York, and his brother Cuthbert. And during the Second World War, they acquired with their personal funds 7 small domestic scale historic buildings in York, because they feared that post-war pressure on redevelopment would put the heritage assets, the streetscapes of the city under threat, and how far-sighted they were in that. Today, we have a freehold portfolio of 81 buildings or sets of buildings with 175 tenantable units. Of those, 52% are in the residential sector. So we had 91 or so of those, and 48 commercial. Our commercial occupiers are across a very broad spectrum. We have some restaurants, we have dentists, we have retail, we have doctor surgeries, we have the church congregation, we have accountants, we have lawyers, we have normal office spaces, we have a museum, we have the York's Theatre, and we have a youth drug program charity in one of our buildings. So very broad spectrum of wholly commercial businesses and also socially motivated businesses. Rent, sorry, could we just go back, please? Rent is our only source of income, and more about that later. We turn over in rent about 2.5 million. We have fixed heritage assets, i.e. how we value our historic properties, at 30 million. The building sum insured is 150 million. So somewhere between 30 and 150 is the value of our properties. Next slide, please. So I tailored two loans and contrasting. One was a property purchase supported by Caf Bank. The case was a significant addition to our portfolio of historic buildings. The repayment was planned from strong anticipated rental income. We achieved that strong rental income up until 6 months ago on that particular property, more of that later. And the impact was that we could proceed with the restoration of that building to exacting conservation standards and the inevitable conservation deficit. The second example I'd like to talk to you about is far less exciting. It's about the balance sheet that Richard was talking about earlier, and our balance sheet needed restructuring in two ways. We've tackled one of those with Caf Bank support, and we will be dealing with the other in due course. The impact of the work we did on our balance sheet and around net current assets in particular, its impact was always intended to improve our focus on charitable purpose. What we didn't know, and its unplanned impact, was to give us tremendous resilience during this COVID period. At the beginning of March 2020, you could have accused us of holding too much cash. At the beginning of April 2020, we looked resilient. Next slide, please. This gives you a snapshot of our typical annual expenditure. And you can see in there that our payroll is about 12% of our expenditure. So our payroll is very low. I know many charities in the heritage sector, sometimes their payroll is 120% of turnover, and they're constantly looking to grants to make up the difference. We approach things from a very different point of view. We keep our staffing and we keep our overheads very low indeed. Our loan costs are 24%, represented on that slide by 18% capital repayments in a year, in the present year, for example, and 6% interest. Over on the left-hand side, conservation projects, which this year will be about 36% of our expenditure, and that's be around £1 million normally per year. But that is the flexibility we have for uncertainties, the amount of conservation work that we do in any one year. Next slide, please. So let's look at the first of those case studies. This was the acquisition of the former Saddlers and Leather Goods workshop and store in York on Lendal, Robson and Cooper. This was purchased in 2015 for 850,000 with a Caf Bank secured loan of £595,000, and that was over 10 years. We refurbished that, it was completed in 2017. The cost of that was about £750,000, which led to a conservation deficit of £500,000. Conservation deficit being the difference between cost of acquisition and the cost of refurbishment and what the property would be worth in today's market. We secured a good let from a local business called House of Trembling Madness, which is a quirky pub, bar, restaurant which had proved itself in York, and they excelled with the fit out of this building. And we commenced with a rent of £60,000 a year. The current rent on that is zero, and our tenant there is 2 quarters behind. We've given one of those 2 quarters as our contribution, but we're confident that in due course that business will come back. Just a quick comment on COVID and the impact it's having on our income, which is rents. Cash receipts year to date, as of this lunchtime, were 88% of last year, which is really quite exceptional. We had modelled at the beginning of the financial year that going down to some 35%, but we now anticipate that we'll end up somewhere between 65% and 75%. So the gap there is we expect some people will defect on the rents, and also reliefs, which we've dealt with on a case-by-case basis. But I'm confident, and Richard will be pleased to hear this, that we won't need to call you, Richard, and have a discussion this year, despite the exceptional circumstances about delaying some of our payments or interests. Next slide, please. The working capital side, the less exciting bit. If you look at the balance sheet from last year's annual accounts, and you'll see the red circles, and they identify a net current liability of 1.3 million. I wasn't comfortable with that. My predecessor was more comfortable with that, and for good reasons, because we have substantial fixed assets. But we will be going for grants to meet conservation deficits in future years, and the immediate reaction of grant providers to the asset ratio being significantly below zero is not good. And I was determined that we would put our get our net current assets up to a sensible level, which you can see with the green circle is 600,000 plus. To do that, we secured a 2 million 25-year mortgage with Caf Bank on a mixed commercial and residential properties of a plainer vanilla category. They weren't too complicated in terms of their complexity and difficulty understanding by a regular surveyor or a bank. So that's why we chose those. We found we did have discussions with other high street banks, and we do have some lending with other banks, which has come historically. But I found the high street banks useless compared with Caf banks. They didn't want to give loans on property for more than 5 or 10 years at most, and at ridiculous rates of interest. We were able to secure 2.15% over base. So when we took that loan out, it was 2.9%. Today, it's 2.25%. So Richard kindly offered me the option to hedge against the rate interest. I declined that, and I made the right call. So I was pleased with that. Next slide, please. Just on some key ratios here, and on the left-hand side, it goes back to how we value our properties. Our current lending is about 19% of the value we attribute to our properties on our balance sheet. If you were to take the building sum assured, it is just 4%. So you can see that from the bank's point of view, even though we have significant lending with them, it's a reasonably good bet. And in the center of the screen there, you can see the draft, an element of our draft accounts for year ending March 2020. And you can see that total lending, at the beginning of the year was 5.9, going down to 5.4, So that's 471,000 loans of loans repaid, plus the interest. And before Richard points it out, this is the draft. They are to be corrected because we haven't noted yet there the new interest for the £2 million loan on 3 properties at Fossgate, Morell Yard, and 15 to 16 Fossgate. So it's been an interesting experience for me dealing with Caf Bank. I've been really quite impressed with the way they understand us, the way they'll pick up the phone and speak to you quite informally. They're always interested in what we're doing, and it's a genuine pleasure once a year when they come up here and they meet the team and we show them around some of the work that we're doing and the social impact that is being achieved through many of our historic structures. Thank you very much.
Thank you, Jonathan. Thank you for your kind words and your time this afternoon. So we've got 10 minutes left and we've had lots of questions. So thank you very much for all the questions you popped in the chat. What I'm going to do is put a few to Richard and Holger, but please note, if I don't get time to get to your question, we will group them all together and answer them and send them in an email later on in the next few days. So there's an interesting one here for you, Richard. It's saying, we talk about how we operate all over the UK, in Scotland. What do we do in Scotland, and do we have a sister organisation in Scotland?
We have Caf Bank itself in Scotland. So we have 2 members of staff based in Glasgow, and we have a number of banking clients and a number of lending clients in Scotland, both in the Central Belt and outside of it. So Danny and Stuart are based in Glasgow and able to have conversations and meet when we're back in much more normal times with individuals there.
Great. Thank you very much. Over to Holger. Holger, when we're looking at social impacts, do we take environmental impact into account?
Yes, we do very much. So we have in the past invested in community energy projects, so wind farms and solar on people's roofs, and we've invested in campaigning organisations in environmental campaigning and educational social enterprise. So yes, very much so. We also recognise the increasing impact, of course, of environmental issues on society and on our beneficiaries. So we are increasingly seeing these factors come into play when we make our.
Are you okay there, Holger?
Yeah, I've finished answering the question. Did you hear that?
Oh, sorry, you broke up there on us. So thanks very much. And yes, if you go onto our website and look at our case studies, there is one particular social organisation that's very much around the environment. Richard, so the next question is to you. It is, if I'm borrowing to purchase a property for an endowment fund, how long does it take for sort of, you know, what's the time frame to be able to do this?
Absolutely. Well, there's 2 questions that scare any banker. One is how much is it going to cost, and the other is how long is it going to take? Because the answers are very much for both, depending upon organisations. We tend to say that it will take us around 6 weeks to get to a decision on your case from the point that we start interacting with you, and that normally we advise that you've got a 12-week period after that to get to drawdown. But like all good averages, they are only true for one in a very small number. We have got to an agreement for someone within 2 weeks before on a £2 million facility, and we have drawn down loans within, I think, 40 odd working days. For some people, that time period needs to be really quick. For other people, actually, they want to engage with us early and to work through at a time that works for them. So I'd encourage people to pick up the phone, to talk to us, talk about what drives their needs, And in particular, we're seeing at the moment, obviously, people looking to take advantage of the stamp duty relaxation and get projects done by March, which is definitely doable. So, yeah, talk to us about what drives your needs.
Okay, thank you, Richard. Just quickly to Holger, and then I know that we want to put some to our guest speakers. Holger, does Caf Venturesome provide any expertise to help create a business plan, upskill, and help with our strategy?
So we will provide advice on business plan. We're not able to provide the help to work with you through the business plan, but we do work with partners, sometimes grant funded or sometimes paid for by the organisations, who are very experienced in providing that support. And we also have CAF also has an advisory team which may help with that. So I would recommend again picking up the phone, and we can look at what options are available to your organisation in order to go through that process. One thing worth noting is that a business plan is not compulsory for an application with us, although it's of course always helpful, but it's not a necessary step. So again, let's have a conversation and see whether you've got what you need in order to apply for a loan or not. Okay,
thank you. Just a quick one. Holger, in your presentation, you stated that most venturesome loans are 6.5%. So why is that so much more than high street banks? And then over to Richard, what is the average interest rate for Caf Bank? So Holger, first, just quickly to you.
Yeah, so with social investment is very much for those people who are unable to get funding from a high street bank or to get cheaper funding. We have our capital is able to take higher risk, so we usually find that our clients are not able to access other funding, or that the funding available is not enough for their needs. Yeah, because on average we do lose a relatively high percentage, maybe 10% of our capital during the lending for organisations that are unable to repay. We do need to reflect that to some extent in the interest rate as well.
Okay, and Richard?
Yeah, absolutely. I mean, the Caf Bank proposition is slightly different. So interest rates are dependent upon the deal itself. But as a region, you can expect to be somewhere between 2 and 3% over base rate. And as Jonathan mentioned kindly, there is the opportunity to look to fix for 3 or 5 years, if that's appropriate for your organisation.
Thank you. Richard, I know that you have found a question for our guests, so do you want to put that to our guests?
Yeah, I'm not sure if we've lost Kemi at the moment, but Jonathan, while you're there, and Kemi, if you return, it just struck me that one thing that would be really interesting to hear from both of you, and Kemi, you're there, so Jonathan, if you go first, and then Kemi, is what your organisation has learned from 2020. You both run organisations that are really effective, as we've seen today, and just a minute or two on what you've learned would be, I think, really useful.
The biggest thing, Richard, is the importance of being close to your customers, and and on our commercial occupiers particularly, we've spent an enormous amount of time, mainly on Zoom and Teams, but some face-to-face, understanding their businesses, understanding where they are, understanding their hopes for the future, knowing where we can kind of give a quarter's rent or half a quarter's rent or help in some other way. And I think that's been, it's not just the result of it, but it's the process that we've been through. And I think that's been responded to very well by the overriding majority of our our tenants. So the goodwill has been really important. And secondly, at the start of COVID, we were 2/3 the way through a sort of cloud transition, putting a property management system, which we hadn't had before, in the cloud, and switching our accounts over to a compatible software system. So that has accelerated, and it's enabled us to work remotely in a remarkable way. So, you know, we pride ourselves in low overheads, but, you know, low overheads and more flexibility are certainly the thing of the future for us.
Thank you.
Yeah, I'll second what Jonathan's saying. I think we need to be adaptable. That's one of the things I've learned about being adaptable, because a lot of our work that we did was face-to-face, and we had to kind of find a way to move to digital to be able to work with our participants. So even when we're thinking about we might be going into a second lockdown potentially, it's like, okay, we had plans to do face-to-face work, and now we have to switch to digital. So it's looking at the ways that we're still able to meet our service users' needs, but also being able to do that in a flexible way and quite quickly. But equally, it taught us about having additional sources of income. As a charity, sometimes we do solely rely on funding as our main source of income, but also we had our after-school club income, but that was our main source. So if someone was to look at our accounts, most of our money came from the after-school clubs, and that shut down for 6 months. So it was like, actually, we need to look at how we can look at different ways we can bring in income into the organisation based on some of the other projects in which we run, so that we're not if this was to continue in terms of our numbers not being able to operate how we usually do, but we can have sustain the organisation. So I think it's really important to look long term. And one of the things that I learned from the organisation in terms of from you guys was about making sure you look at your cash flow over not just the year, but forward thinking about your cash flow and how you generate income. And if something was to happen, what would you do? And COVID happened, which was 6 months of income stopped, which is half of our year of income, and looking at how are you able to sustain your organizations to keep them going. So looking at other ways you can diversify your income rather than just having 1 or 2 streams of income into your organization, because none of us could have predicted that something like this would happen. And where a lot of our work is face-to-face. So it's like, okay, how do you switch it up and go on to digital? And even we've come out of COVID, like the lockdown, but then there's potentially another one coming where we had something planned for the end of October, but now it's like, okay, we have to switch this now to digital. So I think in these uncertain times, it's about being flexible, but I think it also heightens your creativity to look at actually how can you do things differently, because you can still have an impact without having to sit in front of somebody. So that's the learning that we've had. Okay,
thank you. There's just 2 questions in, which I'm going to answer. They're very brief ones, and then I'll let everybody go because I can see that the time's ticking on. The first question was, what's the difference between an unsecured loan and a secured loan? So an unsecured loan, which is what you would get from Caf Venturesome, is when you don't have any assets to secure that loan on. So if you can't pay us back, we unfortunately will write off that money. And a secured loan is which you'll get from Caf Bank, and that's where you have a building or some other assets that we can secure that loan on. So I hope that's clear. And the last one is, in non-COVID times, does Caf offer any opportunities to meet other charities and peers? Absolutely, yes. And we also want to try and do more digital mixing as well that we can within the next few months. So do keep in touch with us. Please sign up to our newsletters. I think I would just go to the final slides now. I just wanted to thank everybody again, thank all of our guests this afternoon, and for all of you guys to joining us. We really appreciate you giving up the time. And I think the most important thing to say here is next steps. It's really simple. Just send us an email or pick up the phone. We'll always be able to help you, and we'll be able to decide whether Caf Venturesome or Caf Bank is best for your organisation. So I'll just finish with the last slide that will show contact details, and thank you again for all your questions this afternoon. Any that we didn't get to, we will answer them in the follow-up email. So thank you, everybody, and have a lovely afternoon.
Thank you, Joe. Bye.
Thank you, Joe.
Bye.
Bye now.
Bye.